Let's dive deeper into the action with our markets reporters. Abigail, what are you watching?
Caroline, I'm thinking about a contrarian indicator that we were looking at last week. Those are the AI bulls, or the bullish sentiment reading, and that's the retail investing complex. So many think that when they get super bullish, that's a sign that stocks will go in the opposite direction, or when they're not so bullish, stocks will go higher. And if you take a look back in 2016, you see the AAIIs going south, stocks going higher, so that contrarian signal worked. Same thing in 2017. Last year in 2018, pretty correlated, but right now we're looking at a big divergence. The AAII bullish sentiment reading at a 3-year low last week, losing more ground. Renita, some would say this is a bullish sign for stocks for the rest of the fourth quarter. Renita?
Thanks, Abigail. I've got the auto catalyst metal Palladium on my mind. It hit a fresh record today, jumping as high as 1.3%, riding off of, you guessed it, safe haven demand, as China wants more talks before President Xi agrees to sign phase 1 of the trade deal. Worries about the tightening supply of the metal are also still in play, according to Daily FX strategist Ilya Spivak. Now, the metal has gained more than 35% year to date, and Palladium has been on a relatively steady incline since a steep drop that happened in June. Taylor?
Well, Renita, we know that the Treasury markets are closed today, but one way that we're still being able to look at Treasury yields is look at the futures market. And the futures curve on the Treasury 10-year is showing us that yields still are falling a little bit. We're down to about a 161 on that 10-year. And we fold that over into the bank earnings. And generally, that's not a good sign with the yield curve flattening. We know that it's been steepening a little bit, but generally it has been a flattening yield curve story. And that happens again today with rates falling. But then look, take a look. The banks are higher as we head into bank earnings, which are set to kick off tomorrow. We know that the Fed cut odds have been diminishing a little bit. That's good for the banks. And again, we want to see if these lower borrowing costs as of late are enough to offset some of the headwinds that come from the net interest margins and net interest income. And then, of course, you want to take a look with all of the volatility going on in the markets, if that helps the trading revenue. So at least for today, it does look like the banks are higher before we kick off earnings.